keeping a close eye on in the current environment. To take us through what he's seeing, Peter McGuire joining us from XM. Pete, good to catch up with you again. So, of course, we saw that rally on Friday stateside, our local market rallying yesterday, a bit more muted overnight globally. I guess the question is, what now? What are investors looking for to guide them?
Well, good morning, Andrew. Bear markets are traditionally vicious as far as rallies, so it's not uncommon when the S&P's up 6.5% last week. So it was just a huge week to the upside, and it gave back a little bit of that hot air overnight. So, but nothing really as far as a wind down, only down 0.3. Now, where we're up to, you've got the G7 leaders naturally in Germany. You've got the forum for the big three on Wednesday. I'm curious to see how the ECB chair that one, with Lagarde, Powell, and of course Bank of England Governor Bailey. So that'll be interesting. You've got talks as far as where we're going to put a cap on Russian oil prices and get the rubles at, very, very strong numbers, nearly back to its I think it was in 5 years ago, it was around about 54. It's just about that now, down from 138. So it's been an eventful couple of days, Andrew, and I'm expecting this week to fill us full of surprises.
Yeah, absolutely. Well, we don't like surprises, do we? That's not an investor's friend. Peter, so we've obviously been talking about inflation. That's been the bogeyman. Yep. But now we're starting to talk about recession and the real risk there.
Absolutely, Andrew. Yeah, I noticed an article in the Financial Times on the weekend. 15 to 30% Goldman Sachs are saying over the next, matter of months, say, 2 to 3 months, and a 50-50 chance within the next 18 to 24 months. So that puts a headline there. That's, I think, the fear factor running across Main Street. And if these banks really ratchet up, we can't get away from high energy prices. You've got base metals collapsing. So the forward looking, I think, positive tone coming from, the consumer is going to be bleak, and that's not going to bear well for the likes of China and other manufacturers trying to export their way out. So I think it's going to be a tough, hard grind. And then you're looking at rate rises and what Powell's prepared to do in July. I've even got people saying you could see 1% move to the upside for the Fed. So, 0.75 last month, and maybe, well, let's just wait and see how it rolls.
Yeah, okay, so what are you seeing here? We just flashed up that chart. We'll talk about gold in just a moment, but obviously just as far as also the currencies are performing at the moment.
Well, that yen, Andrew, was really one of surprise. It's been incredible, 18-19% spank down over the last couple of months from, the likes of where we were in February and March. And we're now saying it's around about 135.50. The line in the sand, many analysts are saying, is going to be a 145 handle, so there's more downside there. Whether the Japanese will play the game and work in conjunction with all the other central bankers eventually and raise rates, it's the jury's out. But we're saying that you possibly could see that over the next 6 months or so. And the likes of where we're looking at the Aussie, it seems to be very much, range bound at the moment between 68.5 and 70.5. There's no real breakouts there. Euro's getting a little bit weaker. So, US dollar coming off a fraction, but I think King dollar still remains the reign and reigning supremely.
Where are you seeing oil go to now, Pete? Of course, it did come off over the past week or so, moved again higher overnight. Yeah. And of course, that's a killer just as far as growth is concerned at the moment with those higher energy costs.
Absolutely, Andrew. We got a 115 handle for Brent, 110 for WTI. It got spanked down last week, and then all of a sudden Friday it was off to the races. Came off $1 or $2 in Asia trade early yesterday morning, I noticed, out of Singapore. And then all of a sudden it's back up. And I truly believe in my heart, and the conviction is that it's just the big hedge funds and traders are playing with it. It's running between with it 103, 104, back to 120. We're back up there now at 115, so I won't be surprised to take a 120 handle out sometime later this week. I think it's got their continuation as far as, positive sentiment, and it's just a trader's delight. Huge volatility swings, and that's what everyone wants, movement.
Pete, gold. The gold miners were smashed yesterday.
Yeah.
Certainly off the back of like Evolution missing targets there, and the broader market was hit as a result, obviously with those rising costs at the same time. Specifically, though, what are you seeing with the gold price and where that's likely to go, depending, I guess, on where inflation goes or whether we tip into recession?
Well, exactly right, Andrew. I mean, all of those big global themes need to be considered when you're looking at something like, gold and the price of it. I think we're still bullish. I think the world's bullish, but it's just at the moment there just doesn't seem everyone's king dollar and they're trading the dollar, and there doesn't seem to be any other game in town at the moment. But gold's still sitting at 1823. I think it's got up, better legs in the second half of the year. I wouldn't be surprised. Again, a 1950 to 2000 handle, but at the moment there doesn't seem to be a lot of light shining on it. But I think the overall sentiment is going to be positive, and let's just see how it plays up to Christmas.
All right, so yeah, when you're looking at that chart there, you see the potential for positive moves.
I do, Andrew, but I also see, it's very much range bound, and that chart really demonstrates that. It's in a channel. There doesn't seem to be a breakout either side, and it's just, there are other markets to trade at the moment, but I really do think that the overall tone is going to be positive and sentiment's going to drive it higher because of uncertainty, inflation, interest rates, and a whole host of other things that are going to play out. Keep an eye on the Brics++.